Hello, this is Rose with Bullish Bears team. Just checking to see if audio is working. Yep, it seems to be working. Okay, so this is the end of day recap for SP 500. Just going to go through the charts quickly, where we left off yesterday. Yesterday's video recorded session, the recap session after 4 p.m. Eastern time, posted under YouTube. So these are not private, just only for members. It's actually open to everyone, members and non-members. So if you want to check out the previous recap videos and price action, and you want to go over how I trade, just go onto YouTube, take a look at the price action daily recap videos. They're all posted there. They're not many because we just started doing last week, so I'm going to be doing this on Monday, Tuesday, Wednesday, and then Thursday is my live session, and then there's no recap for Friday. So then it picks back up on Monday again. So I'm going to minimize this a little bit, and then let's start with the charts here. So yesterday, this was the Friday, February 21st, and then 24th. Monday, this is Monday, and then we have today. So let me do some housekeeping here, as we do usually. What we do is we take the yesterday's high and low. So this is yesterday's, Monday's low, and then we have the high goes up here. But let me get rid of, I was explaining how I traded in the trade room with all the alerts put out, targets and whatnot. I put out constant targets. Those of you under swing trade room Monday, Tuesday, Wednesday, and Friday can trade with us. Otherwise, you can just, watch these videos and learn the price action anyhow. So yesterday we had some levels that we broke below. I'm not going to go through yesterday, but today, starting with the first bar, let me get my pointer. All right, starting with the first bar, which is right here, we opened sort of inside gap up. Okay, so it was actually a bull candle, and when it first opened right here, so let's see, I also have, nope, I don't. Anyway, so you can see that I had this level all the way coming from yesterday, this blue line, right? So you can see that the price went up above, came back down, came back under, and the next thing you know, we open right here, okay? And then we close. Then you have this bull bar number 2, really didn't do much. I mean, it just got rejected, right? So you got these double wicks. Normally you want to see a bull bar going and testing that high, but that didn't happen. Bar number 3 was basically your sell signal. All right, so basically price is telling you that put a sell order underneath and you can put your stop there and you can go 1-to-1. All right, so the target was once we moved under the 21 EMA right here and we moved under this level, which is the SR Philip line. You can see that it is an SR Philip line means support resistance, right? So you can see that yesterday this was support turned into resistance, 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 support again. Then it acted as support here because it bounced really nicely, but then it came back down and became resistance, right? Then we gapped up, but we're in the middle. So we try to test, this is a range, obviously, right? So we are in this range and we try to test a high, but we failed. So that right there, not being able to go up there and test the highs is even the first bar is signaling you that market is going to come down, right? So we got a high here and our objective is to go test that, and we failed that with the bar number 1 and failed again with the bar number 2. We actually made a lower high. So back to back chart was actually signaling us this is coming down, and then the third bar closing all the way down here pretty low, that told us that now we're going down to this existing, okay, existing range, and we're most likely to test that, and that's exactly what we did. So here's your range, right? So up until bar number 10, we were inside this range, but look what happened. So this is now resistance, right? This is now support. Support held with the bar number 2, broke with the bar number 3, becomes resistance. So every time we go back up, we're going to test, and there you have. And then bar 6 and 7 and 8, they're all telling you that we got a bunch of wicks and we're failing to go up above this SR flip line. Okay, I call it SRF, therefore we're selling. So then, you know, you have this range. So let me extend that range, right? So we had this range right here. If I extend it, so basically we just moved right under it with the bar number 10. So what you could do is just at the close, you could sell that, right? But even if you actually sold bar number 3, this is how I measure it. So let me hold on. Put your sell order here and sit through this pullback. Doesn't matter. You're safe here because your stop is up there. So the 1-to-1 was 32.12 target, right? So if I extend it out, so you sit through this, basically it's rough. You don't want to sit through this kind of pullback, which is a 7-point pullback, if you are actually trading almost 8 E-minis. It's no big deal with micros, but still, so to prevent that kind of sit through, when you see a bar like this here, okay, a sell signal, bar number 3, what you do is you don't just slap a sell order immediately at the close. Yes, you can do that, but then what you're doing is you're trading bar number 4. That's all you're doing. So you're going for about 9 points, okay? No, actually, that's not. If you just sold it right at the close of the bar number 3, then you basically go for just about roughly 7, maybe 7.5. Okay, that's good profit right there. Okay, whether you're you know, E-mini, E-micro, it just doesn't matter. Your 7 points is a great profit, and the ATR at that point was reading 9, almost 10. Okay, so even if you sold and you read the ATR on the bar number 3, that is actually almost 9.5. So you're grabbing 7 points, 8 points. It's actually a big deal. You're getting a good P&L there. But when you see a bar like this, what's going to happen is generally 50% pullback is expected. So say your bars are right here, 1, 2, you want to sell again, you just put a Fibonacci. You can either put your Fibonacci right here, all right? Just measure this big selling bar, which is bar number 3. Now look back, okay? So say you missed this, okay? So the price goes up. Where is it going to come back again, right? Most likely right in this level, which is 61.8 to 38.2. This is a golden ratio. So when you look at the bar number 5, bar number 5 pulled all the way above the 50%, got rejected, came back up, went back up again above 61.8, got rejected, came back up, went back up to the 38.2, and also my SR flip line got rejected. So there you go. So if you missed all of that, your sell signal came in very solid at 10:15 a.m. Eastern time. Okay, so basically this candle is your sell signal right here. So you could have just put a sell stop order and then sell this, right? How much would you sell, right? So let's take a look at the measurement, because I love to measure everything. So this time I'm gonna get rid of this. This time I'm going to measure from here, so to from here to here, All right, so from this move, this swing, and then the price goes back up to where, look where it went up. All right, so if you measured from this to this, price goes up to where? 61.8 golden ratio, and immediately comes back down. Your first target is actually sitting at right here, 32.15. Did we come down there? Heck yes, we did. And then we actually, with this bar number 11, which is this bar right here, we cut through it. That means we created, look at right here. It makes this line right here, which is yesterday's low, the new SR flip line. Okay, so because this bar number 11 cut through it, all right, a lot of people will sell the close of that bar quickly, or they're going to wait for a pullback, okay, and then they're going to sell it. All right, so that means your targets for this bear sell first here, then here. All right, minus 61.8 is your reversal. Look what happened. Price comes down, actually gives you the actual deviation, the one-to-one deviation, 100. Okay, so that's your targets. We come down, take profit, bounce up to the yesterday's low, and then with this bar number 16, we come back. So that right there, bar number 16, is your next sell signal. Okay, so you can continue to use the same Fibonacci, but I wouldn't at this point. You don't really need it. So basically what you're doing is you're selling this bar number 16. And if you just started a sell order with the entry here, your stop right above the SR flip line or yesterday's close, you're going for 1-to-1, 31.8725 is your target. Yeah, you miss all of this, but this market was crazy. I mean, the ATR hit 12 points. So when ATR is above 5 and close to 8, you do not want to trade the market. You want to stay out of it. I mean, unless you have a lot of money and you can really handle risk. I mean, look at these bars. These bars are huge. Even if you're, I mean, even if you're actually entering here, you're taking a risk on this huge bar by putting your stop up here. All right, so you're basically risking this much. So 3,200 to, so you're risking about 14 points. All right, that's a lot of risking. All right, so the market could go up 14 points, can come down 14 points. Well, it wouldn't, but the ATR was saying around 12. Yep, 12 points. So do you really want to risk it? You know, that's the thing. But if you're so sure the market is coming down, at this point it was, once we moved, I'm going to get rid of this. Once we moved underneath this range, we broke out, we moved underneath. What you could also do is measure this range, okay? So you could just enter here, put your stop there, and you could just sell and go for 1-to-1 deviation of this range breakout, which is right here. It would have made your day, but you don't know if market is going to come down at that point that hard. But once you see this separation from 21 EMA, right here with the bar number 8 and 10, I'm sorry, 9 and 10, you have a separation. You're no longer touching, and you get these huge bars. Okay, this is impulse selling with a correction, and the correction ends and the selling continues. Okay, so the selling resumes. You know that this range is doubling down. So you go for 1-to-1 deviation, or you just measure the height or the depth of this and just add it down here. That's your targets. Or you go for double it up. Go for the second deviation. Market was so generous today, just gave it to you. So, but you don't know all of that, right? If you don't know how to trade the deviations, you don't know how to trade, Fibonacci, what are you going to do? You're going to look at the separation. You're going to look at how severe is the separation from 21 EMA. See, here's your first pullback. Market sells again. Look at this huge sell bar, right? 1-to-1, stop goes there, target goes here, right? Here we go. We just go back, right? This is your 1. This is your second, if you don't count this, or you count this. This is 2, and this becomes 3, right? So we made a 1 push, second push, pull back, third push. After the third push, what comes, right? Exhaustion, right? We have a wedge. Exhaustion comes in, so we got to pull back to where? to 21 EMA. Great. So when market sometime around 11:30 noon, it made a nice recovery after this three push down, right? So we got a nice breakout. All right, that's great. So what happened? We just pulled up to 21 EMA, and then look what happened. We got a beautiful bull bar, but we are under the 21 EMA. We're selling. We got this huge overhead resistance. A lot of people, including myself, looked at it at that time as, is this a left inverse shoulder? Is this a right? Is this head? Is this becoming somewhat of a right shoulder? Is this the neckline? As soon as when we saw this bar right here, because I measured this from bar number 28, okay, to bar number 32, even 33, even 34, as a bull flag, okay? So I measured it from here to here, all right? And when market came back down, look at this, 61%, I said, okay, if this is going to pull back, now is the time. But if it didn't, with the bar number 34, it came down. Okay, fine. I said, this isn't a good bull flag. I'm going to extend this, and I'm going to take this into consideration. So here's my swing, and here's my swing, right? Here comes the pullback, 38.2 right here, no pullback. All the way down now, we're tracing down to 50, all right? Is there a pullback? No, the pullback came underneath 61.8, all the way down here. So when a pullback is this much, this deep, I'm basically eyeing, my objective is to get to this high if I can. That's it. Then I'll probably look for a double top and then sell once again. But look what happened here. We only pulled back the 38.2%. And then we got this wick right here. All right. Why did that happen? Why did bar number 38 got rejected there? Is there a reason? Yes, there is. Because bar number 34 is a major sell. Do you see this? This is also a SR Phillip line. Do you see this? This is support. This is resistance. This is resistance. Turn into support. Held it with this pullback up. But then 34 cut through it like a hot knife cutting through butter. What does that mean? That makes this area valid supply zone because the sellers are waiting to sell again. And this is a supply zone, not support, supply zone. Supply zone is where you see impulse sell candles that are big enough that when the market traces back up there, most likely it will sell once again. And that's exactly what happened. This is bothering me. Hold on. Let me fix my pen. It's just too, I think this should do. All right. So if you guys were able to see it, basically this right here, okay, I got a nice support here, this bar number 17, 18, and 19 holding, and then 20 cutting, 21 selling. It's the rejection, the first rejection. Then we got an impulse selling. Then we go back up. But look what happened here. We could not maintain staying above the support resistance lines. So therefore, we got an impulse sell. Also, another separation from 21 EMA. That makes this area ideal for bears to sell again. All right, so institutions are having orders to sell, and then the retail traders come back here and they hit the sell button right there, and then the selling begins. So the bar number 39, which is this bar right here, as a result of that rejection sell. Now, what do we have here? We got a support here, we got a nice support here, we got a support here. We also have a nice support bounce, but look what happened. Another impulse bar separated from 21 EMA, cut through the support resistance line. At this time it was support, now it became resistance. So when the market comes up there, it's going to become resistance. But look what happened. Market tried to trace back, it couldn't even, I mean, look at this, right? So the sellers right here sold immediately. There's no trace back. You put your stop there. This is your one-to-one target for sellers. When sellers, okay, sell the close of this bar, this impulse bar, result of selling starting right here, when the market reverses back up to that starting point for sellers, you're not going to get a pullback, okay? They actually started selling right here. It couldn't even get up there. So the distance between here, it did go up there just a little bit. So from here, 3179 to 3170, so 3 ticks below this area, also a supply zone, market started to tank again, right? So we've got a major separation. So I started to look for, is this market going to pull back anytime soon, right? So we were trading this. I was constantly giving short targets, one after another one. You can just go back into the trade room and see those targets, right? I didn't actually leave. I was all day. I traded. I was live in the trade room. So what happened here? Another selling. So here's your first down, second push, third push. Here comes the fourth one, right? Another impulse. I mean, it was so much selling, I couldn't even fit anything into the chart. So people who saw this impulse, they sold that as well. Put their stop right above here. Here comes your 1-to-1. Here's another one. And there's actually, we call this a stick sandwich. It's actually a range. It's a bear range with a bear breakout right here. This is your breakout candle. You wait to the close. This is how you trade it. So say you see something like this, right? It's a bear, bull inside, and then bear outside. So that's basically your range. All right. So range begins here, range ends there. What breaks that range box? This candle, right? This candle 59. When that candle 59 closes outside the range, where does it close? Right here. That's qualified to sell the market right there. Okay. Where do you put your stop? You put your stop above the range. You go for 1-to-1. Well, let's see if we actually got that. So if you sold here, and you can either put it up here. I wouldn't. I would just put it somewhere above here, this selling bar, and then you get a 1-to-1 right here. But the problem is you did not get that 1-to-1. Now, I was going for this 1-to-1 because it's a nice valid range breakout. But the problem here is that market sold after this wedge breakout. Look how many times market made, lows. First one comes down, pulls back, comes down, pulls back, right? Comes down, pulls back, comes down, pulls back, finally comes down, starts to pull back again. How many times? 2, 3, 4, 5th. I mean, this is just exhaustion. How do you know this is an exhaustion? Here comes the 63, bar number 63 right here is an outside, also an engulfing candle that actually traced back up 1, 2, 3 candles it engulfed, went back up to the low of this broken trading range, all right, this inside bar trading range, right? Then I know that I need to get out, right? So because my stop is right here. Even if I let this go, all right, even if I let this go, I have a way of getting out before giving back anything, right? So even if you didn't actually get out, you see this bar closing, bar number 63 closing that high, you need to hit the close button. You don't need to measure anything, guess whether it's going to come back down, none of that. You just hit the close button immediately. And what you do is you now measure a bull target. You put your stop underneath. Your bull target is 31.5125. So you see an engulfing bar like this, that means market made probably the final low of the day. All right, so I'm going to get rid of all of these. right? So we know that we now made this. Look at this. It's actually a triple bottom. And I was looking at this triple bottom. I was keep telling people, you know what, we really need to pull back. We really need to pull back. Here's the first bottom. I said we got a nice micro double bottom. Now we have a micro triple bottom with a beautiful engulfing bar. We made a low. This low is significant because when we come back again, we'll probably make another low, and that'll be the double bottom. Okay, and then here is your mid, and then if market is going to go back up, it's basically is going to go back up here. All right, it's probably going to come back, test, and then you have targets, targets, targets. But the problem here is that we have another SR Philip line, pretty valid one, in fact. So if I just take this area into consideration, if this is a valid double bottom right here, if this is a valid double bottom, all right, and if market comes back, even gives you a triple bottom, whatever it is, it's better if it's a triple bottom. But if it gives it to you, all right, what it's going to do, first it's going to test right here. That's the first target right there. Then you have another SR flip line here, okay, something like that. Or just make that as your target. So this will be your target, first target to go up, okay? If it comes back down, then that's it. We're back in the range. Then this is a range. Then we're going to come back down. This could be a range trading. Who knows? Okay, we don't know. Market has been horrible. It's kept selling. Bad news all around. So we'll see. But if they break above it, what do we have here, right? We have a minor flip line here, right? So I have to get that into consideration, which is right here, right? So that is your next target. If it closes above, then you have a target up here. All right, so this is what I'm looking for. Okay, so if you look at this entire move down, it's basically smack in the middle of this range. So I'm looking for a 50% up perhaps, and then come back down, because this right here is the most important reversal. All right, so most likely this is where market's going to want to get up there. So, all right, so this is what I see so far. But I want to show you guys something. I go through every Thursday, I go through these cycles, market cycles. And in the last cycle that I marked for us, I think it was last week sometime, and I even marked the last cycle mapping. I said, this is the cycle number 3. We're going to trap the bulls and we're going to sell. Look what happened. Look what happened. Everyone, look what happened since then. I don't know if you guys see this, but I teach this on Thursday, and this is no joke. This is I talk about this all the time. If you want to really know where market is going, there are 3 cycle days: cycle 1, cycle 2, cycle 3. Cycle 1 is always a sell day, or consecutive days of selling. All right, it could be a sell, pull back, sell again until sellers, shorts, or the bears are trapped and the market starts to buy. That's cycle number 2. Cycle number 2 generally goes and tests the high of cycle number 1, okay, where the selling began. Now, cycle number 2 turns into a cycle number 3, which is your range day. And look at this. This range became our distribution. And I said, look for traps, because this is where the retail traders who bought the markets, okay, this breakout, thought that they were in a nice breakout going up to 3,400, never made it. Look, market actually punched 33.97.25 and came down, never tested 3,400. We knew that because I alerted everyone that this is now turning into cycle 1. Cycle 1 is going to be nothing but a selling. So you guys get ready, and we have been selling ever since. So this right here, this is a 4-hour chart. What you're seeing right here, this candle is a beautiful pin bar. This is an exhaustion, okay? Look at the selling. Do you see this bar, this huge bar? Why is this bar bigger than this selling bar, that selling bar, this selling bar, this? Why is it bigger? Because this is the last exhaustion selling before market is going to turn around, okay? And if this is the bottom, if we made a bottom, most likely we are going to go up to where, look at this beautiful 4-hour SR flip line. We've got a beautiful support here. It acted as support and created this huge bounce. Came back down, acted as support, bounce, but then it broke. What does that become now? It becomes resistance. Now, if market is done, okay, tanking, hopefully it is, all right, we need some good news in the market. We're going to start to look for maybe next 4 hours, 8 hours into the European session, into the US session. We want to see bull candles, all right? If we start to see bull candles, this is where we're going, into the supply zone. We are going to get rejected and we're going to sell again. So we're going to go into a major range. Most likely we will come back down and we're going to go back up. This could be the cycle number 2. We could go back up and test here, okay? And then come back down. I don't know. Nobody knows what's happening. All I know is that we are in the cycle 1 and the cycle 1 is exhausted. We might be going into either the second part of cycle 1. We could come back down and keep selling. Okay, if that's the case, that would make the part cycle 1. Then we're going to go back into cycle 2. That's coming. That's going to be the buy. All right. So we know what's coming. We're ready. We're not going blind here. But anyhow, let's go back to my chart again. So right now we made a double bottom. What is that double bottom? That double bottom you're seeing here is that 4-hour trading. All right. And that 4-hour trading translates to this pin bar on the 4-hour ES chart. Go back to the RTA chart. This is what you're seeing. This double bottom is that bullish. It's not a bullish pin bar. If you notice, let me go back. It's actually bearish. It's a bearish pin bar. It's a pin bar, but it's bearish. Now, if you look at the RTH, we still ended the day bearish. Okay, does that make sense? Hopefully it does. We did not end up here. That would have been slightly a bullish pin bar on the 4-hour if we ended up here. We didn't. We are right here. So this makes it still a bearish candle on the 4-hour. You see the correlation there? Hopefully you're understanding. Now, if you put a trend line down here, all right, look at this. Say you took this one. I'll just take right here. You got an exhaustion, right? It goes up, gets exhausted, selling begins. Goes up, doesn't even touch it. Goes up, sells, comes down. Another rejection. Finally, we made a double bottom, but this is still a rejection. We never touched this. Therefore, your 4-hour pin bar is a bearish pin bar. If we touched this and broke above it, that would have been slightly more bullish, okay, on the 4-hour. So this tells me we could get still rejected. We could come down, make a third bottom right here, then finally break out and finally go back up. So there's that possibility, all right? So let's see what happens in the Asia. I don't know if they're going to sell it, they're going to buy it. I don't know. Nobody knows. But this is what's happening right now in the market. And we'll continue all of this tomorrow at 9:30. All right. I do have an ETA charts, and this is the ETA charts that I looked at yesterday with you guys. I posted the YouTube. If you want to watch the YouTube from 24th on February 24th, it's under YouTube video. YouTube videos under bullishbears.com playlist. So just go there and take a look. You'll see it on the homepage. You'll see that at the end of the video, yesterday's recap, I said these areas are where we're going to test if we break. Right? So I found my areas and I said, we're going to test these. These are our bear targets. This was my last one. Look where we are. I mean, you could have just sell, and you would have probably made, say you even sold right here, okay? Came all the way down here to this target. So you're taking 1, 2, 3 targets. You would have sold 73 points. You would have made 73 points with what I've given you guys yesterday. 73 points. Each point is a 4 tick. It's 292 times $12.50. You would have made $3,600.50 with single contract of ES. Divide 10, $365 with single micro. That's all you have to do, just sell and use these, okay? So where are we right now? This is the 1 hour charts, right? These were my targets. Now we have a beautiful 1 hour inside candle with a very heavy overhead resistance. 1, 2, 3, 4, 5, 6, 7 consecutive selling bars and a final 1 hour buying. Would I want to buy this? Not really. I would not buy this. I'm sorry. I really wouldn't want to buy it. It's a beautiful inside bar, but I just look how the day closed. Yes, it looks like a W, so with possibly going up, but we don't know. We're done, right? So we'll know more tomorrow, okay? So hopefully you guys enjoyed this analysis. We could be tracing back up to these levels once again. But if you really wanted to know whether or not there are more targets down here, oh yeah, there are. Here is another one. In fact, it's a very solid one right here. So we could even, Asia could sell this down to 3,100 if they wanted to. So let's see what happens tomorrow. But thanks for watching, and this will be posted under Bullish Bear's YouTube channel, and it'll be free to everyone. Take care.